Hello friends, welcome to the Trading Temple channel. Today we're going to talk about Bitcoin, take a quick look at the total market caps, and also check out the stablecoin dominance. The chart you're looking at is the Bitcoin chart, and this chart is on the 1 hour time frame. So after the news that came out yesterday about the US interest rate, we saw that the price went up in this area, and after the FOMC ended, the price dropped back down and is now moving downward. The price of Bitcoin today is almost around $90,000, and it's down by about 2%, with the entire crypto market pretty much in the red. Some coins have dropped by almost 9%, like Cardano. Well, we've talked a lot about Bitcoin in previous videos, but we haven't made a complete video just about Bitcoin itself. We said we'd make a full video about Bitcoin that's focused only on analyzing Bitcoin. We had talked about Bitcoin being in this downtrend and that there's a trend line. We can draw it from up here, from the point where the all-time high is heading downward, and you can see that Bitcoin has tested this trend line 4 times, and each time it has been rejected. You can see that here and close to here, it tested it again, and in this area, and every time this trend line has rejected it. Look, in this chart, we have a bearish flag pattern. A bearish flag means that when the price is in a downtrend, the price is gradually falling, and when it gets close to here, it slowly forms a flag, moving up gently, and then continues on its path again. We call this type of structure a bearish flag, and it will most likely continue on its path and make another leg down. And what we're seeing here is pretty much the same thing. Look, here we're moving downward, the price is going down, and we have a flag forming. It's forming within this channel, and at any moment, this flag could break downward. That is, the channel could break here, and we could move down towards $75,000. Whenever we have a bearish flag situation, we can easily find the next target for that asset. How can we find that target? We can take the highest level from here, where the flag has formed, and draw it downwards. Then from this point, we can place it where the breakout happens. For example, if the breakout happens in this area, we can copy this. This same leg that has moved down here will most likely go down further. That means there's about a 70% chance that the next leg will be the same size as this leg that went down. And this really shows if you look at the left side. You can see that the reason is that in this area, Bitcoin has a very strong support level, which coincides with the all-time highs of 2021. And this is a very beautiful confluence, which suggests that Bitcoin might drop down to these levels. And if it can't hold this level, our prediction for the next leg is that the price could drop down to around $70,000, and it needs to fill this gap that has formed here. This is the best case scenario we've chosen, unless something else happens in the market, you see? Right now, Bitcoin is in this area, there's a very strong resistance, close to $93,000, as you can see. Bitcoin has hit this level several times and has always been rejected, and we have a trend line here, which we've just discussed. It's sloping downward, and Bitcoin has hit it 4 times and been rejected. At the same time, we have a bearish flag, which is this orange channel that's sloping upward. It's moving upward. You can see it hits this level and gets rejected, and now, with the candle that formed yesterday, we call these kinds of candles a shooting star candle. This type of candle that you see here, we call it a shooting star candle. When this kind of candle forms near a resistance, it strongly indicates to us that the price is likely to be rejected. This type of candle is a dangerous one, which we also talked about in the previous video. For example, you can see such a candle on this side as well. We can see that it caused the price to drop. And even if we go further back in time, you see here too such a candle was formed, which caused the price to fall. And if we go even further back, again we see this type of candle. For example, there's another one on this side, which caused the price to drop. These types of candles are very dangerous, especially when they are close to resistance. When they form, they cause rejection. The only way this candle can be invalidated is if the price comes back above it and a candle closes above here. That is, if it closes above this wick that was formed here, then it will be confirmed that this is invalid. As long as this candle has formed here and no candle has closed above it, it remains valid, and the probability of moving lower is higher. In the structure we're seeing, the likelihood of moving down further and getting closer to the next support is greater. Now, let's move on. Looking at the total market caps had a very beautiful fake out that was neutralized. You can see that the total market cap of the entire crypto market was able to break through this trend line in this area and move upward. But unfortunately, a fake out formed here, and after the FOMC ended, it caused the price to come back down again, even on the 4-hour time frame. We can see that this was a fake out where it broke the trend line and then came back again. And on the total market cap, excluding Bitcoin, we see the same structure. We see that the price broke the trend line, went up, and then got rejected again. And on the total market cap, excluding Bitcoin and Ethereum, we see the same thing. A fake out, then it got rejected again. In the next area, if Bitcoin can manage to take this part, there's, for example, a 20 or 30% chance. There's a possibility that Bitcoin can break through this area. Our view is that if Bitcoin can break through here, it could move toward $100,000. That means the next support for Bitcoin, the next resistance for Bitcoin is in this area, which is close to $100,000, and the price will face some trouble there again. It will face trouble because in that area, we have the 50-week moving average there and also a 50-day moving average. On the weekly time frame, the 50-week moving average is also located here. All right, let's look at the stablecoin dominance. They've formed a very beautiful structure that's really giving us a signal. It's giving us some dangerous signals. This is the stablecoin dominance, which is close to 9% of the entire crypto market, belonging to Tether dominance and USDC dominance. You can see that. Let me explain first, because if stablecoin dominance goes up, it's bad for altcoins. And it's also very bad for Bitcoin. When stablecoin dominance drops like here, it's good for both Bitcoin and altcoins. And right now we can see that here, this dominance has had a multi-year resistance, and that's caused it. It broke through this multi-year resistance, and now it's beautifully holding at its own support level. And it's confirming that this is a support, and in the next move, if this dominance wants to go up, it can rise to these areas and will make a sharp move and head towards capturing 11% of the entire crypto market. With this next move, many altcoins will take a heavy hit. And I also think Bitcoin itself is in this league, heading towards $70,000. Let's see what will happen to the crypto market in the next few days or months. This is what I'm showing you on the chart. This is pure analysis for trading purposes. Now, other things might happen because, as I said before, trading is never 100% certain. This dominance is on a support level, so there's a chance for another leg up, and we're also seeing this on the Bitcoin chart. The reaction that Bitcoin has shown in this area has been weak, and there's a possibility it could go lower now. If something else happens in the meantime, like some good news comes out and the price breaks through these levels and goes up, that's no problem. And in the next leg, the price could reach $100,000. That was today's video about Bitcoin, along with a brief look at the total market cap and also stablecoins. I'd be happy if you like and subscribe, and don't forget, trading is never 100% certain, and everything is based on probability. Until the next video, goodbye.